The Banking Scene Director's Cut goes behind the scenes, sharing stories and insights to help you build the bank of tomorrow.
Andrew, good to see you digitally this time. I've seen you in person so much the past few weeks, including, for example, last week at our barbecue night. It was, I think, based on the feedback from participants, likely the best barbecue we had so far, both in terms of networking, meeting new people, but first and foremost, also the content. We spoke about payments in 2030 with speakers from Fibblefin, BNP Paribas, BPCE, KBC Bank, former Lloyds and Swift, Digital Currency Governance Group, all very bright people with a clear vision on where the future is going and where it's hopefully not going. What was for you the highlight of the event?
You mean besides the fact that we actually had barbecued meat for a change? Come on, to a South
Yes,
African,
aside
that
from
has
that.
to be the highlight. So if you're
It wasn't
talking
the big
about...
steak. It wasn't the big South African barbecue, was it?
No, it wasn't a proper big steak. Maybe we'll have that at some point in the future. But the highlight for me was without a doubt Peter van Hees
For many.
talking about the future.
It was different. It wasn't the payments guy coming to do a presentation at the payments barbecue. That was for sure.
Yeah. I mean, you had given him carte blanche and said, come and talk to us about payments in 2030, but take whatever angle that you want to, and he really took advantage of that. And the reason why it was a favorite, and it's just because it's a bias of mine as a sci-fi fan, he was talking about second self, about our digital twins, our own digital twins, and focused very heavily on the agentic future. There was a lot of agentic AI in his talk, and a lot of cautions to the banks. The key one being, if your future customers are agents, AI agents, robots, your website doesn't actually make any sense because your website at the moment is designed for humans, even your
Very
app.
striking quote from Peter was, I think, one where he said, if I can give the bankers one piece of advice is don't invest in your apps anymore.
Yeah.
That was mind-blowing. From a banker telling bankers not to invest in mobile banking. That's, for me, it's sci-fi on its own, in one quote.
And there's where we come, as much as I absolutely loved the presentation, and I really believe that the agentic future is going to make a big difference. I think the timescale is slightly off by about a decade, maybe.
Yeah, and he was rather honest with it. He just spoke about 2030 because I asked him, but he didn't really pinpoint to a specific year.
Yeah. So, I mean, if we're looking at payments in 2030, I think it's much more grounded. It's much more, the other presentations that were there covered more likely scenarios of what we would see. So as much as
How do you think you'll be paying in 2030?
The same way as I'm paying today.
With
exactly the same pay. With my ring. Contactless. It's pure convenience. Do I think I'm going to be paying with CBDCs or anything else? No. In the Western world, contactless payments.
2030 we'll all be paying with gold. Is that what you're saying?
But, it's the ultimate convenience for me at this point in time. Even when I travel to regions where QR codes are prolific, I've got a daughter that lives in Thailand. They pretty much only use QR codes over there. My payment ring and contactless cards were not as well accepted as her QR codes, but there's a lot less convenience for me in the QR code. You have to take out your phone. Somebody has to scan something. You have to... Contactless, it's tap with a device, whether it's your phone, your watch, my ring, or anything like that. It's just it's a no-brainer. To me, it's the closest and most convenient form of payment and cash for in-person now. We're talking about in-person. When it comes to online, there's problems that I think need to be solved. And hopefully, you had covered some of those in your session about the things we don't want to be talking about in the future. And it did make me chuckle when checks were brought up, knowing your beginnings of banking involved checks. I mean, I'd forgotten. I haven't used a checkbook in nearly 30 years, I would say. Don't know about you. So to me, checks is not, but of course the Americans are still heavy on checks. And there were some other things as well about what people don't want to be talking about. What for you were the key things that came out of there?
I think the presentation of Peter was definitely an eye opener. Broaden the mind as well. And aside from that, yeah, I mean, you and I, we work heavily on payments and we do a lot of trend watching in payments. So obviously, I didn't expect to discuss checks, but I do hope that we get rid of them by 2030. But the fact, for example, instant payments, that by 2030 we will no longer be talking about instant payments, but just payments. That is not a big revolution, if you ask. But you and I, we hosted a dinner 3 days ago on fraud. And there you did feel fear for new regulation that's coming up on October 9. And it's like in 2 weeks, where there will be many more instant payments and fear of much, much more fraud as well. And there are
Instant
some
fraud.
solutions that are provided, like the verification of pay. There are other alternatives like behavioral analytics to make sure that the person that is doing the payment is effectively a person and not a bot, etc. But it remains a very seamless solution to transfer money from one place to the other, and very hard for banks to deal with that instantly. So I think, yeah, instant because of regulation, but also because customer demand will definitely be normal in 2030. Cross-border transparency was also one of the topics. And in that respect, I think it's interesting that 1 week later, 9 banks across Europe made a big announcement, big splash about the development of a new company that will issue European stablecoins, officially to create more transparency, a lower cost for cross-border payments, to allow programmable money, etc. That's definitely interesting to see how that will evolve. I just don't really know whether that is an opportunistic initiative or defensive against what's happening in the United States and the whole digital bank, central bank digital currency. Now, I heard yesterday that those banks have been working on it for quite some time already. And that is like earlier than I think the Genius Act was being discussed in the United States. So I reckon it's more a reaction against the whole CBDC agenda of the central banks, making sure that they have a private alternative where banks are in the lead. But I still don't know whether use cases will be sufficient to make it a profitable business.
So I'm going to jump on one specific aspect of stablecoin use cases, which is always put up first. Cross-border payments can be instant and much lower cost. Can we just say when TransferWise, the company now known as Wise, first started out, their original model was peer-to-peer payments. That's how TransferWise worked. I don't know how long, if you are a TransferWise customer. I've been
Till you
a
change
customer,
bank, I think. I only use it to pay you.
but I've used Wise since it was TransferWise. Back in 2011, I was an early adopter. I had a use case and I needed to be able to use it. And cross-border international payments cost a fortune by my bank. So I used them and I was sold. That was it. I've used them ever since. It surprised me because I actually, up until quite recently, thought that Wise used Ripple as a back-end infrastructure.
Really?
It doesn't. I thought that. I don't know where I'd picked that up somewhere, but it was a misconception. It is complete nonsense. Wise do not use any form of blockchain at all. Wise works on old-fashioned banking. Straight up, they work on Swift. They work on the basis of having relationships with banks in different countries. And Wise cross-border payments happen instantly. Now, they achieved that over 10 years ago using the current banking system. Why is it that the rest of the banking system didn't adopt the same approach? I'm not saying everybody implement Wise, but they could have. The opportunity has been there all along to reduce the time and to reduce the cost on cross-border payments. It's always been there. Wise has proved it. Nobody can argue that. And yet now it's, we've got stablecoins and this is going to solve the problem. No, the problem could always have been solved. My personal belief is that the existence of stablecoins has forced those discussions. And therefore, although people are saying the technology is the core of the solution, I don't think so. I don't think that anybody in banking had the will to actually make changes until stablecoins and CBDCs and things like that were starting to be discussed, and there were some other, maybe, I wouldn't even say viable competitors, but some other ways of doing things. Now people are getting together to discuss stablecoins, and they're going, you know what, we can actually make cross-border payments cheaper, faster, more efficient. And they're doing it now because they're having the discussions, not necessarily because the technology is available. They've put off those discussions. I mean, that's just a personal opinion. I know I've just hijacked you in that because you had no idea that I was going to say that. But why do you think it is that the banks have taken so long to address this issue of cross-border payments, speed and cost, when it clearly could have been addressed a decade ago? Do you have an opinion on it?
Maybe it's worth asking someone from Wise to join us at our podcast one day to see how they look at that potential new competitor. I think cross-border within the Eurozone isn't much of an issue from a consumer point of view because we don't do that many transfers. Maybe different as a UK citizen who needs to travel a lot to the Europe or has a lot of business there. But aside from that, have 80% of the conversations in payments around cross-border, and it's only 2% of the volume.
Yeah, tiny amount of the volume. And when we're talking about stablecoins, let's be clear that the use cases are concentrated around wholesale or corporate, treasury, things like that. They're not talking, the 9 banks that have all got together, they're not necessarily looking at it as a retail banking customer use case. And if you look
They're not limiting it either.
No, they're not limiting it.
I spoke to a banker yesterday who gave me a pretty neat example of that programmable money in renovation, for example, where today a bank can issue a loan for renovation with the condition that it needs to be used for renovation, but there's never any check. We don't know whether all the money will be used for renovation, but in the future, if you have programmable money, you could set a rule that money that's been issued as a loan can only be used to that account or those kind of organizations, etc., making it much more concrete and also self-controlling that renovation loans are effectively used for renovations. And that is, I think, a very good retail use case where programmable money could be valuable. Although you could also maybe set the rules somewhere else instead of just in the money, as blockchain promises.
You could, and we've had lots of people talk, and we've sat in lots of sessions about programmable money, and there is an immediate concern about the dystopian ways that money could be made programmable, particularly when we've been talking about CBDCs. Who makes the rules? Who makes the rules and say, I can remember a conversation many years ago when I worked for a particular...
That's probably also the reason why the ECB is very clear in saying that digital euro will not be programmable.
Yes, because it's got to mirror what cash is like in order to increase adoption. But going back to the use cases, I downloaded a report that I saw today. It's Citibank's latest trend report on stablecoins. Did you download that?
No, I just slide passing in my feed.
Well, LinkedIn feed is full of stablecoin stuff at the moment, right? And they were talking about a huge opportunity and a huge expected. They've revised all of their projections, and they're now expecting, and they use 2030 as a case, they're now expecting their base case to be 1.9 trillion US dollars stablecoins issued globally. And that's their base case. Their bull case, they're talking about $4 trillion.
To do what?
They focus on the corporate and treasury use cases, not on retail. They're not talking about this as being a fiat currency
Makes
replacement.
sense.
They're not talking about it's corporate and treasury. And actually, that was an area where in our think tank dinner this week, somebody had said, well, actually, if we're talking about corporate payments, programmable money would be so much more useful that had inbuilt checks and balances, because CEO fraud and things like this are some of the bigger fraudulent cases. And there was a great quote that came out of that. A fraud that ends in a payment is not a payment fraud. That was a great quote that came out that evening. The trouble is that a lot of frauds end with somebody losing money. And in a corporate case, those numbers can be quite large because it comes from employee impersonation. It comes from these CEO scams, again, impersonation scams. And in a corporate environment, if the money was programmable and it could only be paid from one organization to another with all of the inbuilt checks and everything like that, it could potentially save a large fraud
Absolutely.
a large amount of fraud. So I can see the stablecoin use case, although I revert back to my conversation about WISE, speed and cost could always have been solved using the existing infrastructure. They were just difficult conversations to have. Now, the existence of stablecoins is forcing those conversations to be had, and people are potentially using stablecoins as the excuse or the reason to actually address the whole way that they've been doing this before. Now, Payments BBQ, Sarkar graciously put up an Easter bunny up there, and she said she looks forward to the point in 2030 when payments are 24/7 and they can happen, they're not going to be held up by the Easter holidays kind of a thing. Money has been digital for decades. It's just numbers. Most of us don't carry physical notes anymore. It's just numbers and it's all electronics. So many of these problems could already have been solved, and I'm looking forward to them being solved. So what are
There's
your...
going to be new problems.
Well, we always have to have problems, otherwise there'll be nothing for most of us in the industry to do.
Which
So
would be a good thing.
what are the key things that you'd like to look forward to based on the conversations that we've had over the last couple of weeks? In terms of payments, what are you looking forward to by 2030 based on the conversations and the stuff that you've been reading?
Well, I hope by 2030 that we can have more automated payments, maybe through agentic AI, where payments become really part of a customer journey and just not one step in the process. That's one. That we have found a solution to at least reduce fraud to a minimum wherever we can, because of course, as we learned, a lot of cases have more to do with emotional elements rather than technological ones. And when a exotic lady contacts a single man of above 50 and etc., banks have no role to play in telling that person that exotic lady may not be a real lady, or that her mom may actually not exist, etc. So those are fraud things where banks can't do a lot, in my opinion. But on the ones they can, there I do hope that we find more solid solutions to reduce the fraud to a minimum. And then there is the whole wallets and agents. I kind of touched upon that, to make payments part of an entire value chain thing, but not a separate element that where we still have a lot of things to do. And then in the context of stablecoin, I hope that it will help to improve efficiency in the whole wholesale payments business. But I don't see it yet in retail, except when you talk about very specific use cases through programmable money, for example. But will that lead to sufficiently high volumes in Europe to make it successful? That remains to be seen. Anything else? I will be talking next week at Cybos on quantum computing.
I was going to ask you about that.
For 2030, chances are low that it will touch our day-to-day life. But I do think we need to be careful, because you never know when more dubious organizations have a quantum computer ready where we currently have no idea about. In that case, we need to be ready to avoid a massive attack on our infrastructure that's incapable of dealing with that new future of quantum. So I hope that we are ready, and that's more from a protective point of view than a promising point of view, that we are quantum ready when it comes to IT infrastructure by 2030. But that's not something that we as a consumer will feel a lot.
Talking about next week, I'm going to be moderating a interesting panel on
An interesting one.
aligned. Sorry?
An interesting one.
It is an interesting one, yes. Culturally aligned AI. And we're going to be exploring whether or not different cultural values across the world could be and should be embedded in AI thinking, in AI algorithms applied in them to provide better financial services. It's a thought-provoking topic. Some people might not think it's even possible. I don't know. That's why I've got experts in the panel. But the whole purpose of the panel is to just make people think broader than where we are today.
But maybe another important detail is that the panel also includes Lisa Russell, who will be speaking at Banking Scene BBQ Night later in November.
I wasn't going to make this a promo slot, but
it's not a promo slot. It's just a rational observation of what's going on next week at Cybos. And hopefully we can speak more people there to share their thoughts on 2030 and maybe have a follow-up podcast to compensate for last week where we unfortunately virtually missed you a lot.
Thank you very much. And with that, we'll wrap up this week's episode.
Alrighty. Bye-bye.